Time to go inside the news at 1 p.m. Interesting little meeting at the White House. President Obama met with Warren Buffett and Bill Gates today for a conversation that touched on how to expand the economy, according to the White House. Gates' wife Melinda was also at the meeting, which focused on an initiative to encourage the wealthiest Americans to give the majority of their wealth to charity. U.S. stocks solidly higher across the board. Healthcare and telecom service sectors leading the advance as strong retail sales data boosted optimism about consumer spending. Bank of America Merrill Lynch says the S&P 500 will rise to 1,400 in the next 12 months. But the S&P retail sector is falling after weak sales from Best Buy showed some specialty retailers could be struggling. Shares of Best Buy trading more than 3 times their average daily volume and tanking 15%. Muni bond prices are sinking, with long maturities getting hit the hardest. Investors concerned about a flood of new tax-exempt debt sales with the likely demise of the Build America bonds. Prices of AAA-rated munis declined enough to lift yields by as much as 14 basis points, according to a preliminary reading of the market by municipal market data. The Fed is expected to leave interest rates unchanged and evaluate its QE policy. The announcement is due at about 2:15 Eastern Time. Reuters Fed correspondent Pedro da Costa joins us now from Washington. Pedro, what could the Fed do today that would disappoint the market?
Hi, Rhonda. I think the market's base case, of course, is that the Fed will do absolutely nothing and just simply renew its commitment to purchase $600 billion in government bonds before June. I think there are a couple of things that could throw the markets off. The first is the markets are pretty happy about growth prospects right now, and they could be disappointed if the Fed's assessment of the economy turns out to be a little bit more morose than its own. The second potential issue is that bond yields, as you know, have sparked sharply higher in recent days. Now, the markets have interpreted that as a positive sign that growth is coming and folks are getting out of the safe haven trade. If the Fed sees it otherwise and somehow alludes to it in the statement as a tightening of financial conditions, that could spell trouble.
All right, Pedro, we'll hear from you a bit later on the Fed. Analysts and traders tell Reuters JP Morgan's positions in both silver and copper could be tied to the bank's large customer trading business rather than any proprietary strategy. The bank is in the spotlight amid reports that it amassed a large copper long position and it was unwinding a big silver short. JP Morgan has denied holding 90% of the LME's copper stock warrants, but tells the FT it is reducing its position in silver futures. Coming up at 2 p.m., find out why Reuters credit analyst Ed Rombach is expecting the Fed to come out praising QE2. We've got you covered on the Fed. Join us for reaction and analysis with former Atlanta Fed President William Ford, former Fed Governor Robert Heller, and economist David Malpass. That all starts at 2:10 Eastern. I'm Rhonda Schaffler. This is Reuters Insider.